As we move into 2026, the digital landscape has shifted from speculation to a high-stakes battle for the backbone of the internet. While retail investors were distracted, Filecoin quietly evolved from a cold storage archive into the world's first programmable decentralized cloud, marked by the landmark launch of the on-chain cloud mainnet this month. But with the token currently navigating a critical price floor around $1.50, a massive question looms. Can Filecoin's transition into a full-stack infrastructure for the AI revolution finally ignite a rally toward that mythical $1,000 target? Today we aren't just looking at another altcoin chart. We are decoding the economic DNA of a network that aims to replace AWS. We'll analyze the supply shock triggered by the upcoming 300 million FIL burn proposal, investigate how the F3 upgrade has slashed retrieval times by 450x, and reveal the hidden catalyst that could turn this sleeper giant into the definitive asset of the next bull run. The real leaked secret to Filecoin's future isn't a single news event. It's the virtuous economic cycle currently spinning into motion. As of early 2026, we are seeing the supply-demand scissors begin to close. On the demand side, the Filecoin on-chain cloud has successfully onboarded over 100 enterprise development teams, driving active storage deals to record highs. Because every new deal requires storage providers to lock up FIL as collateral, we are witnessing a massive liquidity siphon, where the circulating supply is being drained into the network's foundation. When you add the deflationary pressure of network fee burns and the potential for a massive 25% total supply reduction via governance, the math starts to look explosive. Filecoin is no longer just storing files. It is becoming the verifiable data layer for the global AI industry. For long-term investors, the technical divergence is the real signal. While the price has consolidated, the network's utility and revenue metrics have hit all-time highs. This gap between market price and network value is the hidden key that suggests Filecoin is positioning itself not just for a recovery, but for a total revaluation as the core infrastructure of the decentralized web. The first thing you have to realize is that Filecoin isn't just about storage. It's about verifiable, decentralized data. In the old world, when you save a file to Google Drive, you're trusting a company. In the new world, Filecoin uses math to prove your data is still there. But the real DNA of this project isn't just the code, it's the tokenomics. Most people see FIL as just a payment token, but it's actually the fuel and the glue for the entire network. Think of it like a global utility grid where the infrastructure is owned by no one. For Filecoin to succeed, the token must align the incentives of thousands of independent storage providers with the needs of millions of users. If the tokenomics fail, the network collapses. But if the economic engine is built correctly, every new byte of data added to the network creates a recursive loop of value for the token. We're moving past the speculation phase and into an era where FIL's value is backed by the most valuable resource on Earth: data. Is your portfolio backed by a company's marketing budget or the mathematical certainty of the world's data? To understand where FIL's price is going, you have to look at the supply-side dynamics. Right now, the circulating supply sits around 740 million FIL, out of a maximum cap of 2 billion. But here is the leaked truth: that 2 billion number is a myth. A massive portion of the supply, specifically the 300 million FIL mining reserve, is currently under debate in governance, FIP 0093, to be burned permanently. Furthermore, let's talk about collateral. Every time a storage provider wants to earn rewards, they have to lock up FIL as a pledge. Currently, over 70% of the supply is tied up in mining operations and collateral. This isn't just staked like a regular DAO, this is locked security. When you combine this with the burn mechanism, where a portion of every network fee and every penalty for slashed miners is permanently removed from the supply, you have a long-term deflationary pressure that kicks in as the network grows. As we move into 2026, the initial heavy inflation from early investor unlocks is finally easing, creating a much thinner path for price to move upward. Why worry about inflation when the network itself is designed to eat its own supply as it grows? The supply side tells us why the price can rise, but the demand side tells us why it will. The secret key to FIL growth in 2026 isn't just people backing up their photos. It's the Filecoin Virtual Machine (FVM) and the on-chain cloud. For the first time, Filecoin is programmable. This means we are moving from cold storage, archiving old files, to hot storage and compute over data. Imagine a decentralized version of Netflix where the smart contracts automatically pay the storage providers based on how many people watch a video. Or AI models that live directly on the Filecoin network, training on datasets that never leave the decentralized cloud. This creates a massive utility sink. As dApps and enterprise clients like a KV bridge Snowflake data onto Filecoin, they need FIL to facilitate those smart contracts and storage deals. We are seeing active storage deals hit over 35 million, storing 1,110 PIB of real verified data. This is no longer a testnet experiment. This is enterprise-grade demand finally hitting the order books. When AI starts buying its own storage, do you really think it will care about the price of the token? The real-world connection is found in network utilization. As of early 2026, Filecoin's utilization rate has jumped to 36%. While that might sound low to a layman in the world of decentralized infrastructure, it's a sign of a maturing economy. We are seeing revenue from paid deals, contracts where people actually pay to store data, grow significantly, reducing the network's reliance on block rewards. For you as a holder or miner, this means sustained profitability. The F3 upgrade has delivered 450x faster finality, meaning transactions that used to take hours now take minutes. This makes Filecoin competitive with AWS for the first time in history. When you look at metrics like daily transaction volume hitting $500 million, you see a network that is actually being used for business. This isn't just a number go up scenario, it's a utility go up scenario that eventually forces the price to follow the usage curve. The market can ignore utility for a year, but it can't ignore a billion-dollar revenue stream forever. So what is the hidden key to FIL's growth? It's the virtuous cycle. Increased demand for storage leads to more data being on board. More data requires more storage providers to lock up more FIL as collateral. More transactions on the FVM lead to more FIL being burned in network fees. This creates a supply shock where the amount of free FIL available on exchanges dwindles just as institutional demand from groups like Grayscale, who already hold over 2.2 million FL, starts to peak. Filecoin is positioning itself as the foundational layer for the decentralized web. If data is the new oil, Filecoin is building the world's most secure and efficient pipeline and refinery. While the road has been long and the skeptics loud, the on-chain data doesn't lie. The leaked reality is that the structural pressure for a price breakout is being built byte by byte, deal by deal. The question isn't whether Filecoin has the tech. The question is whether you have the patience to see the cycle complete. The landscape of wealth is changing and blockchain is the compass. If you want to stay ahead of the curve and master the world of decentralized storage and crypto assets, you're in the right place. Hit that like button if you're ready to claim your slice of the future, and subscribe to join our community of forward-thinking investors. We're decoding the blockchain every week so you can turn insights into action. Don't get left behind in the old world. Stay updated, stay informed, and let's build that portfolio together.